Okay. Hello, everybody. Welcome to the Ninja Trader presentation from EOTPRO. EOTPRO, we have two different companies, EOTPRO Developments and EOTPRO Prime for Services. We've been, just one second here, let me just get everything working again. We've been in business for over 5 years. It's actually our 5-year anniversary just recently. EOT Prime Services is an NFA member. We have anywhere between 1 and 300 clients in the trading room every day, and that varies on free trials days. It's actually been higher than 300. We just purchased part of a brokerage company called AGN Futures in January 2011, and I'll be talking about that a little bit. We are real traders. We do trade real money. I'm not a very big trader. I trade 3 contracts in the markets every day. I'm going to be showing you a detailed look at my account today as well. And we're going to be analyzing that, taking a look at all of the results that we have attained here at EOTPRO. We are really suited towards the more advanced trader. We really aren't suited towards newbie traders. We definitely, the people who are with us are highly advanced. They want the technology. They want the stuff that we're offering. The customer profile is fairly advanced trader. And we use NinjaTrader 7 exclusively to do all of our trading. I trade on a fully automated strategy. And we try to really use the highest technology available. And I'm going to be talking a lot about that today. Here's our NFA number, EOTPRO Prime Services, NFA ID, and you can see here that we have no arbitration or actions or CFTC regulation cases, so we have a clean record and we like to keep it that way. We have a heck of a lot of NinjaTrader indicators. Every time that we develop an indicator, it stays in the list. We never take any away because a lot of our clients actually use our indicators in many, many different ways. So it's important that this is just a small snapshot of some of the indicators that we have within NinjaTrader because I couldn't fit them all in the screenshot. And not all of them are even on our website. So when you sign up with us, we just give you everything. And it's really because we have a lot of long-term clients that have really found their own way to trade. They can use the EOTPRO indicators are really good for mixing in with your own technology and your own methodology. You know, one example of that is we're really big into volume analysis. And so perhaps the analysis that you have been using for years and years and years and years has been missing a volume component. And perhaps you may want to use some of our components for volume. So that's a good example of how you would use some of our indicators in conjunction with yours. Here's a little bit about me. Here's me right here. I've been a trader for 9 years. I quit my full-time job 9 years ago, and I launched right into trading. And for the first 9 years. For the first 4 years, I lost money, and it was a tough road. Thanks, Bob. I appreciate your kind comments there. I love, just a little bit about me, I love to drive my car. I own a new BMW M3, and motorcycles are a lot of fun too. And I'm just starting to get, I love to run, and I'm just starting to get into bicycles, and I have to say, man, the cardio on bikes, I thought it was in good shape, but bicycles have kicked my butt. Bicycles have kicked my butt. That's a whole different subject. I'm going to talk to you now about some of the disadvantages we face as retail traders and what we do as EOTPRO to try and overcome those disadvantages. So Larry Tabb, he is a big research market group. He says that over 80% of the market volume is algorithmic trading. That is pretty much a disadvantage to us. There are massive amounts of computers trading in the futures markets now. It's just accelerating. The what's happening in the markets right now is actually unprecedented. And it's really important to understand the environment that you're trying to trade in. Just to forward that point, TNT Group, which is a group of automated traders, and they were recently featured in an article in Automated Trader magazine, say they think that 90% of discretionary traders have been pushed out of this market because it's so difficult to trade. It's so choppy, it's so nasty, it's so difficult to trade that they're not making any money. And so 90% of the click traders, as they call them, are being pushed out of the market. You know, it used to be that the discretionary trader had a chance against the algo because the algos weren't very, very small, weren't very smart. And now it's to the point now where the algorithms are smarter than the discretionary traders and really taking advantage of the discretionary traders. So it's not discretionary versus algorithm anymore. It's really algorithm versus algorithm now, and that's the kind of environment that we're trading in. And that's really, really tough. That's a really tough environment to be in. The basic my feelings are what is the basic nature of the markets. This has several answers, but basically we are dealing with severe levels of chop combined with massive trends combined with severe levels of chop. And on top of that, the CME every 7 months is doubling. The volume coming out of the CME is doubling every 7 months. Just because of two reasons. Because of the way that they're reporting ticks. Now, I could get into the way that they're reporting ticks, and this could be a whole webinar by itself. But the honest truth of the matter is that they're probably going to change the way that they're reporting ticks again, because a lot of people have been kind of disappointed with the way that they're reporting ticks right now. Data latency is a huge issue for retail traders. I'm going to be talking a lot about that right now. And quality data feeds. So let's launch right into that right now. Let's talk about data feeds. Our stuff, since we use pretty high technology, is very, very sensitive to data feed differences. And we have found there to be absolutely huge differences in data feeds. Absolutely staggering. And where we have found the differences to be are obviously in latencies and in volume information. It's shocking to me some of the differences that we have seen between some of the retail data feeds. You wonder, you get some of these data feeds for free. Well, there's a reason why you're getting them for free. Because there's a large amount of latency and some of the volume isn't being reported properly. I have heard, and Stocks and Commodities has said, that there is actually spread manipulation going on in data feeds, and I'm going to be talking about a little bit what that is and what does that mean. They did an article, which I'm going to show you on the next slide, and what some of their allegations were on some of these data feeds. It's just what I want to do is I want to try and tell you to please educate yourself. If you're serious about trading, please educate yourself about what the technology you're using actually is. How is it derived? Where are the servers? Where does the data come from? Those are all things that you should really understand. If you're a short-term futures trader, I really believe that you need to really know what is going on. Information is power. And I'm going to try and give you a little bit of that information today. So please, the biggest points of this slide is to understand where your data is coming from and where is it. A little word about latency. We're pretty short-term traders here at EOTPRO. And so latency is pretty important to us. And you can see here, I live in Vancouver, British Columbia, Canada, about as far away from Chicago as you can get. And at times, my internet latency is 115 milliseconds. Now, you would think a tenth of a second, not very big, but that's one way. Now, this is a really high, bad latency day where I was experiencing huge latency issues. But this just goes to show you that if you're trying to get, have you ever wondered why you can't get filled on those super fast moves? Have you ever wondered why you get slipped when you're in a trade? Well, it's because of data latency. It's because of latency across the internet, and it's because of latency in your data feed. Those two things are absolutely huge, huge contributors to slippage. Slippage costs you money, especially now that we're trading in automated mode. Holy smokes, man. You want to reduce the slippage as much as you can. So you really got to pay attention to what's going on. I always check my internet connection for latency numbers, and I go to pingtest.net and speedtest.net all of the time, almost every single day, to make sure that nothing has gone wrong, because I really want to have the lowest latency. In fact, you want to be on the best internet. It's not download and upload speed that's required that is important, because the download and the upload speed, even if you have crappy internet speed, that's not an issue. The issue is latency. Very, very key point, please. Look at your latency and pay attention. Stocks and Commodities, as I mentioned, did an article on data feeds. Now, they didn't say which data feeds that they were looking at, but they referred to them as Vendor G, Vendor M, Vendor R, Vendor T, and Vendor Y. Now, you could probably guess, based on the initials, what they were. T, maybe, well, I'm not going to say their name. And they ran a strategy on these 5 data feeds, okay? And the strategy, they did the exact same thing on the strategy of these 5 data feeds. And it ranged anywhere from $6.17 in profit to $302 in profit. Now, it was just a simple little strategy like buy on bar open, sell on bar close, or something like that. So my point here is that, and what they found consistently again and again and again and again, was that there was a 1 and 2 tick difference between these data feeds. And I see that I have some spelling mistakes in here. Please ignore those. And they found some differences in the between 1 or 2 ticks consistently. And what they were saying was, if these what they were alleging in the Stocks and Commodities magazine was, if these data feed providers can manipulate their bid and their ask enough to maybe get a tick, maybe trade against you, or take trades that you're getting an exit but they're getting filled and they make 1 or 2 ticks, on TF, and they use TF as the example, that could add up. If they had like, I don't know, 2,000 users, that could add up to profit for them to $20 million a year by slightly manipulating the data feeds. Now, that's a pretty big allegation that they were making on these data feed providers. And some of the differences that we've seen in data feeds, it makes me kind of think. It makes me kind of go, it makes me want to learn more about the data feed providers that we're using. It really does. It really does. This is one of my favorite slides because it's kind of funny. Because why traditional price indicators do not work. I just told you not too long ago that some big market research firms did some analysis on the market, and they think that about 80% of the volume going on in the futures market is algorithms. And it's kind of funny because I did this too. I was using CCI and MACD and RSI and Bollinger Bands. But look at when these things were invented. 1980 for the CCI, 1978 for the MACD, 1978 for the RSI. Bollinger Bands, that's the modern one, 1988. Stochastics, the 1950s. An Atari computer, 1985. Do you really want to use... The problem is, I've seen a lot of people come to EOTPRO. They read a book. The book says use this stuff. The book says to use these indicators. The book shows you how to use the CCI and make a killing. And then they try to use CCI and they get killed. Now, I wanted to put together this slide just to show you that it's my belief that these indicators have had their day. I think that these indicators are dead and all the ones like them are dead. The time for these indicators is done. They were good in 1980 and 1978. But yeah, CDS. I'm totally with you, man. I did the same thing. I read those books and I got killed too. And this is the stuff that they told me to use. This is the biggest mistake that newbie people are doing when they come into the market is they're using antiquated technology. You can't use this stuff anymore. You can't use it. You can't use it. So I kind of compare it against the Atari computer. Yeah, I just thought it was totally hilarious, man. I just thought it was hilarious. Another thing that I don't like and I think is a disadvantage, and I'm going to be telling you why I think it's a disadvantage, is candlesticks. Who said that we should be looking at price in the candlestick? Who said that price should be represented as candles? Who said that that's the best way to look at price? I'm going to show you something that a huge institutional trader in Asia does a little bit later on in my presentation, and what they do, and how you are missing mega amounts of information. Now, granted, EOTPRO candles are liars. Yeah, CC, I'm totally with you. Candles are kind of liars. You're missing a huge chunk of information, and I'm going to show you a screenshot from an algo running from a huge hedge fund and what they do, and maybe you guys can gain some inspiration from that, because I certainly did. So I kind of got to say that those are, I ran through a lot of disadvantages there. Latency, data latency, spread manipulation in data feeds, traditional indicators, candlesticks. That's tough. Now I'm going to tell you about my philosophy and what I like to do as a professional trader now. So the first thing that I want to tell you is that I don't want to use any of that crap. I don't want to use MACD, CCI, RSI, because my perception is that I think about 90% of the people who come into the market are losing money. And it's really a sad statistic. I wish that wasn't true, but it is true. And we need to face facts. And that if 90% of the people that are coming into the market are losing money, it makes sense that I don't want to do what they do. I don't want to do what they do. If they're losing money, why would I want to do what they do? Doesn't that make sense? Doesn't it make sense that if they're losing their butts, I wouldn't want to emulate them in any way whatsoever? And that means no MACD, no CCI, no RSI, no range bars, no minute bars, no volume bars, no tick bars, no nothing. I don't want to use any of that stuff. And I want to use, since I am trading in an environment that has a huge amount of technology, I need to combat technology with technology. We're never going to be as smart as Goldman Sachs. We're never going to be as smart as some of the big hedge funds, like night trading or whatever. We're never going to be like that. But we can be on a definite higher level than using this stuff. That's for sure. So I want to make sure that my technology, that my methods, that my data, and then I get fast fills and I get fast exits, I want to make sure that my stuff is on a different level. And by doing this and by making sure that I'm different, that gives me an advantage. You know that you don't want to be like the herd. You don't want to be like the crowd. You don't want to be a follower. You want to be a leader. You want to do stuff that is different. You want to be contrarian. Those are the people who make money. So, that's great, Bill. You want to be different. Yeah, I do. So what do? Well, okay, here we go. If we can't predict price and we can't predict time because we can't. It's impossible to predict what's going to happen in the future. What do? Well, we really rely heavily on statistical probabilities. That's what we do. We rely on statistical probabilities. That is the only way that you can make money trading. You can't predict the market. You don't know what's going to happen 1 second, 30 seconds, 5 minutes. You just will not know. It's impossible to predict the future. So the only way to proceed forward is to use rock solid statistical probabilities. Now let's talk about that for a second. Let's say you were using CCI and MACD and RSI and Bollinger Bands and Kellner channels. Let's say you were using those indicators. And you were trying to do research on those indicators to try to understand what the statistical probabilities of their setup would be. That's hard. That's hard to be objective. If you're not a programmer, and I'll be the first one to tell you, programming in C# for Ninja, that's freaking hard. That is hard. I don't know how to program in C#. That's why we have 3 programmers on with us full time. So, it is hard to do the proper amount of research to get those statistical probabilities and mine that data properly and objectively to get the statistical probabilities that you need. I mean, I really learned that using statistical probabilities was the only way to trade. I mean, I did everything during those 4 years. I did everything during those 4 years. I did it all. I tried everything, and during those 4 years of losing money, I did it full time, 15 hours a day. I worked my butt off to try and find an edge in the market, and I couldn't find it. I couldn't find it until I realized I was looking for the Holy Grail, which doesn't exist, and that I should be using statistical probabilities. I was trying to win every trade. I was trying to pick tops and bottoms. You can't do that. You can't do that. You can't really do that. Let's be honest with one another. Trying to pick tops and bottoms and trying to win every trade, it's almost impossible to do. You just can't do it. The markets are just too random. So the very first thing that we do in order to try and be different is we made our own types of bars in NinjaTrader. EOTPRO made these bars called Summer's bars. Summer is my daughter. She's 2 years old. She's very cute. So we decided that we were going to name these range bars. They were derived from range bars. And we decided that we were going to make our own bars because I don't want to use what everybody else is using. If they're using 5-minute, I don't want to use it. If they're using range bars, I don't want to use it. If they're using volume bars, I don't want to use it. So the only way that I could get around that is by making my own bars. Summer's bars actually are adaptive range bars. They range anywhere from between 2 range and 12 range and everywhere in between. So Summer's bars are designed to be adapting themselves throughout the day. Have you ever noticed that if you do use range bars, and I know a lot of you do, yeah, I really got to talk faster. You're right, Joy. I really got to talk faster because I'm almost out of time now. I only have half an hour, and I'm only on slide 16 of like 50, so I better talk faster. Summer's bars. Adaptive range bars. I really wanted to be different, so we made these. Let's take a look at a little slide between Summer's bars and range bars. Here is a shot of 6E on a range bar. Here is 6E, and this is the type of chop that we're dealing with on a regular basis. It's very, very difficult to deal with. I encircled these with a blue square, the chop. Here are those same areas with Summer's bars. So you can see if I flip back and forth between the chop on the 4 range. It's big, it's long, it's likely you're going to get signals in there, it's likely you're going to get chopped up. I'm not saying that there's no chop with Summer's bars. I'm not saying there is no chop, but what I am saying is that the likelihood of you getting a signal in here is a lot less than there is in getting a signal in here. If no matter what methodology you're using, no matter what you're doing, the less probability there is to be chopped, the better. So the very first thing that we do is we use summer spars as our technology for proprietary to all our EOTPRO clients. Yeah, we have a lot of clients, but it's important to understand that we want to be different. And we don't have enough clients to impact the market in any meaningful way. No, Rich, these are not similar to case bars. They're completely different than case. I know Cynthia Case's stuff. Cynthia Case is brilliant. I had a chance to meet with her people and her programmers not too long ago. Very, very smart. They do a lot of cool stuff in the hedging industry. It's really, really cool. I also noticed that there's a lot of questions going by. I just don't have time to answer them. But please, at the end, we'll talk about it if we have time. So we start out with those range bars, with our adaptive range bars, just to try and be different. Then we try and use the most up-to-date technology that we can get our hands on. Right now, we have two entry technologies, NCEP 2.5 and NCEP 3. NCEP 2.5 is a neural network. It has 17 indicators inside of it. We train the neural network every 1 or 2 months. It gives us live statistics on every trade. It's never been optimized. As soon as you optimize something, it is useless. We are highly against optimization. NCEP 3 is another neural network, but it's a bit more sophisticated. It's more self-learning and more advanced, definitely more advanced architecture. It only goes short. We found that the statistical probabilities of going short were really way better than the ones going long. So NCEP 3, which is, I'll show you some signals from NCEP 2.5 and NCEP 3, are two entries. We try and use very, very high-tech technology to enter the market. Let's take a look at some of those now. So basically, NCEP 2.5, which is our major entry, looks like this. It is an arrow generated on the screen with percentages below it. And those percentages are live statistical probabilities on how likely the market is to go in your direction. In this case, we have a 73% probability that we're going to reach target 1. We have a 33% probability that we're going to reach target 2. And we have a 32% probability that we're going to reach target 3, which are 5 ticks, 8 ticks, and 13 ticks. This statistical probability was derived from 10 years of data. We mined 10 years of data, and we looked at 1.5 million entries, and we derived these statistics. So, and then what we do is we say, okay, we have the statistics, let's filter the arrows at a certain level. In my case, I filter them over 50%. I don't want to take a trade unless there's at least a 50% probability that it's going to move in my direction. So all of the arrows that have 40% or 30% or 34% or whatever percent, those are all gone. We only trade the arrows that have a high statistical probability, and you can filter these arrows to whatever you want. If you want high statistical probabilities, you turn it to 75. You're not going to get very many arrows, but it does work. So, and in the interest of moving along, here is a screenshot of NCEP 2.5 on ES. I am going to show you some losing trades, but this is typically what my chart looks like on a day-to-day basis. I'm going to show you some more detailed screenshots. But here we have on ES. This happens to be where most of the trades were pretty good winners. NCEP 2.5, it's not perfect. It's not the holy grail. We do get stopped out. We do have losing trades. And here are some examples of some losing trades to the short side, where we were in a big uptrend, and we had a couple of trades to the short side. So the neural network was thinking, hey, we're pretty overbought here. We better go short. Well, that didn't really work out too well, did it? So I wanted to be honest with you guys to show you the losses as well, in that we aren't perfect and our technology is not perfect and it isn't the Holy Grail, but it does do a pretty damn good job. I'm going to show you a real detailed look at my account. NCEP 3. Let's talk about NCEP 3. It uses cycles and market structure. We looked at market structure specifically inside the data mining, and cycles and volume and multiple time frames and support and resistance. And we dumped that all into the neural network and we said, tell us where to trade. Where is the best statistical probabilities of us trading? NCEP 3 actually does not plot the percentage numbers on top of the arrows, because a lot of our customers just didn't even look at the percentages. They just wanted them gone. They just wanted to see the arrows. Whenever an arrow shows up, I just take it. I don't care what the percentage is. I'm already filtering the arrows at a high percentage, so I don't really care what the percentage is. I just take it anyway. So we don't plot the statistical probabilities of the percentages. But this is sell side only. And actually, we have it available on 12 markets now. Here's a more zoomed in look of NCEP 3 sell side. It does a very good job. Again, it's not the Holy Grail. You are going to take stop outs. And but NCEP 3 is pretty awesome, man. It's pretty high technology. It does really cool. If NCEP 3 only goes short, how does it do in an uptrend? Well, here is a chart of an uptrend on crude when it was way back at $91. Almost back at $91 today. Here is a chart on crude, $91, and an uptrend. Here we have a loss here. We have a loss here. Actually, this one fell like 10 ticks in your direction. So, I wanted to be honest again, show you it does pretty well, though. It doesn't really get too faked out. It does pretty well. This is my screen on a day-to-day basis that I show in our trading room. Here you have 6E, ZN, GC, ES, CL, 6J, NQ, and silver. Now, silver has been the bane of my life lately. It is brutal. I have made so much money on silver, and I've lost so much money on silver. So we're thinking of taking silver out of the mix here and putting in like 6C, because silver is so volatile. But this is, if you were to come to our trading room, this is a snapshot that you would see of our market. So here we go. Money management. What do I do when I'm in a trade? How do I manage my stuff? What do I do? How do I trade? Great. Okay, well, I'm trading 3 contracts at a time. I'm not a huge trader. I'm only trading 3 contracts. I'm trading my own account live. And I get into the market with all 3, and I get out of the market with all 3. I don't use the targets. So I'm in all and out all. Okay? I'm going to show you how I do that. This is the indicator that we use to manage our money. We call it the volume splitter 3. And the volume splitter 3 looks at the volume happening on each bar. I guess you can call this volume on each bar market delta, order flow analytics, volume delta. It's called about 19 different things from 19 different vendors. It's all the same thing. It's just part of what we offer. It's good. I like it. It's what we're showing here is, like, if we take this bar for example right here, we can see that there were 36 blocks of small traders between 1 and 5 contracts going long. 16 blocks of medium traders between 5 and 10 contracts going short. The large traders, 10 contracts and above, were not taking a position on this bar. And the total net blocks going long were 20. This is the information that we use for this blue line. This is the blue line that we use to get out of a trade. So here is an NCEP 2.5 long signal right here with the little percentages on it. 60% chance that the market's going to head up in my direction. The market did move up in my direction. And I get out when the volume splitter hooks down against me. So I put a little vertical line here showing you that this is the bar that I got out of the trade on. That's how I manage my money. I manage the money by looking very closely at how the volume inside the bars is moving. I look at how the volume inside the bars is moving. If the volume is positive, I'm staying in. If the volume is negative, I'm getting the heck out. Okay? Let's look at some more examples of that. Here's a euro trade. And here I'm long on the euro right here at the bar close, right here at 48.02. At the bottom of my chart on the left-hand corner of all the charts, including yours, there is an entry price right there if you want to trade discretionarily, although we trade with a strategy. The entry price was right here at the close of this bar. So we're long, we're long, and the volume splitter hooks down, and we get out on this bar. Now, it is important to note that it doesn't look like a very big move, but we're talking like over 10 ticks on the euro. We do like to scalp here at EOTPRO. We are scalpers. We try to get as much of a big move as possible. But the markets, man, they are friggin' choppy lately. So it's really important that we try and get out with the maximum level of profits that we can. And so we use the volume splitter to do that. In this case, it's yellow. And then that's the bar that I got out. Here is a loss. Here I'm trading CL. Here's a win. So we're short on CL at approximately 112.30. And we're getting out on this bar right here, somewhere in the neighborhood of 112.15. So that was about a 15-tick trade profit. Here is a loss right here where we got a short signal. And right away, the volume splitter hooks up against us. And we're out on this bar. We're out on this bar. The key to trading is to really reduce your losses as much as possible. The volume splitter 3 and trading in the direction of volume and looking at that volume on a macro level has really done a good job for us. I gotta say, my profitability has exploded, and I'm going to be showing you that a little bit later on today. Here's another example of GC, and you can see how I got long at GC up here at 1542.50. And then right away, the market retraces against me. I mean, that's a big retrace, but the volume splitter stayed long, and I stayed in. I stayed in this trade, and this is the exact moment that I got out of the trade, right here. So the volume splitter does an awesome job of not only helping you get out, but also helping you stay in during your fake outs, during those fake outs. This is a perfect example of one of those fake outs that scares the crap out of people all of the time, and that the algos are trying to take advantage of you by scaring the crap out of you. This is one of those times where looking at the real volume underlying in the bars is really telling you the true story of what's going on. Looking at the bars is just a big fake out. It's just a big fake out session. The market is very, very efficient in faking you out and taking your money. Here's another example of silver in two trades. One NCEP 3 short here at the beginning of the slide where we would have gotten out on this bar right here. And another example of silver where we would have gotten out on this bar right here. We didn't catch exactly the bottom of this move. We don't catch every single massive move on silver, and in this case, this trade was probably about $1,000 because silver is $25 a tick. It's major bucks, man, major bucks on silver. And so the volume splitter 3 helping us to stay in that trade, giving us confirmation, and also helping us take profits at an appropriate level. Here's another example on silver where the silver hooked right here on this bar right here, helping us get out of the trade, giving us that confirmation. And look at where it started to hook down. We had a higher high in price on silver, a higher high on price. But that volume splitter, the volume splitter 3, was hooking down, and it wasn't. And these are all on Summers bars. These are all on our proprietary range bars. These are all on our proprietary range bars. It's pretty cool. It does a very good job. It's not the holy grail, but it does a very good job. All right, I want to talk a little bit about, okay, let's say we're in a trade. We're in a trade now. It's moving in our direction. Everything is groovy. Woohoo, we're making money, making money, making money. We're happy, we're screaming, we're laughing. We're calling the wife over to the computer, honey, honey, look, I'm making money. And then it's time to get out. What do we do to get out? Do we just exit? What do we do? No, we don't exit. Let's pretend that we were short. Let's pretend that we were short. What I would do on the Ninja Dome, I would bring my stop down to 1532.10. I would bring my stop right down to this level. And I let the market take me out. Because what happens, what we have found that happens is when it's time to get out of the trade, the market almost kind of knows that. It almost kind of knows. And if you just hit close and you get out, it'll inevitably fall down some more. Why not try and take advantage of that little tick down? Why not take advantage if you bring your stop to 1532.10? And if it ticks down to 1532 or 1531.90, take that tick. Move your stop down another tick. If it ticks down again, move your stop down another tick. If it ticks down again, keep trailing at like right on top of the market, like right there. Like trail, tight as you can go, and take every single tick out of the market. I can't tell you how this little technique, how much money this has saved me and made me. Using the Ninja Dome and using this technique to get out has been like freaking awesome. It's been like awesome. You guys have to do that. Don't just hit close. Don't just hit close. Bring your stop down right on top of the market. And if it ticks down, take that tick. Take that tick. Take it. Take every tick that you can get. Let the market take you out. Let the market take you out of the trade. Don't hit close. Let the market take you out of the trade. Freaking awesome. Awesome. If there's one thing that you take out of this little seminar, that's it. How have I done trading? Here's my account. Daily bars. Right here is when I've been started using that technique to get out of my trade. And you can see the bars on my account have grown taller. Using that technique, I've made a lot of money. I'm trading 3 contracts and 1 contract in silver. 1 contract in silver, 3 contracts on the other markets. Let's look at some more of my performance going back some more. Here's more of my performance on a daily basis. I don't make money every day, but I do pretty well. Let's look at more of my performance zoomed out. This is my biggest winning streak ever. Happened in end of January. 3 winning weeks in a row. But I also want to show you the bad. I've had 3 losing days in a row there. 3 losing days in a row there. And I can't tell you how many of our customers said, Bill, what's wrong with your system? Bill, what's wrong with EOTPRO? How come I've lost money 3 days in a row? How come I am losing my butt 3 days in a row? It's part of trading, man. It's part of trading. The market goes through its horrible phases. Nobody was complaining when I was making money 3 weeks in a row. But it's kind of funny how that happens. Going back even further. Back into September 17th, 2010. You can see here's 3 losing days in a row here, 2 losing days in a row there. You know, I don't want to harp on it. There's the flash crash day right there. Flash crash. Awesome day. Here's another look at my account. I shouldn't be really showing my account number there, but there it is. Anyway, that was there's another look. There's all the markets that are in there. Should probably change that slide. Okay, now it starts to get cool. Now stuff starts to get cool, and now we start talking about more advanced stuff. Because we have servers at the CME data center in Chicago. I'm going to talk to you about a partnership with Thomson Reuters. I'm going to talk about how we calculate our analysis. I'm going to talk about what we do with NinjaTrader. I'm going to talk about all this advanced stuff now. So if you're not into advanced stuff, now's the time to go. Here we go. It's important to understand, as I discussed before, how things work now. If right now, if the CME sends data to a data feed distributor like Rhythmic then sends it to Zenfire. Zenfire then sends it to your computer. Your computer analyzes the data, sends it back to Zenfire, sends it back to Rhythmic, sends it back to the CME. That is a long route to travel when you're trading futures. That is a long route to travel when you're trading futures. There's a lot of data latency there. And if the data latencies are high, you will be slipped. You will not get fills. Have you ever noticed that it's hard to get fills? And most of the good trades run away from you? That's why. It's because of data latency and because of the path that the data has to travel. That's why it's important to understand where your data is coming from. So, and especially if you use market orders to get in and you have a long path to travel, if your order has a long path to travel, it's really important. And if you use market orders, no wonder you get such bad fills. No wonder. Now, and if you use a wireless connection, it is a massive screw fest. Please do not use a wireless connection to trade. Please do not use a wireless connection. You are just looking for massive trouble. It's really, really high latency in wireless connections. So we decided we were going to put servers at the CME data center. Currently, the number of servers that we have at the CME data center, thanks to Thomson Reuters, are actually 5. We have 5 servers there now. 2 for Thomson Reuters and 3 for serving our clients. And we didn't cheap out. This is a big advantage to you for our clients. We didn't cheap out. We have 16 CPU cores. We have 128 gigs of RAM. We have RAID 10 hard drives. We have, since we're at the CME data center, we have sub-millisecond data latency, which is really, really good, and it's an advantage to you at home because we do things a little bit differently here at EOTPRO than I think everybody else. So what happens is that the analysis comes from the Rhythmic data servers into the EOTPRO data servers, and then we'll go to Thomson Reuters, and then we'll go to another algorithm server, which I can't really tell you whose that is, and then into the AGN block account server. But basically what's happening is, just to keep this simple, is we are calculating our analysis at the CME data center in Chicago, and we send to you just a +1 or a -1 over the internet. There's not a big stream of data coming to you. It's +1 or -1. +1 go long, -1 go short. And we plot it with a fancy arrow on your computer. All of the analysis is done in Chicago. We have very, 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 very fast latencies, data latencies. We're connected right to the Rhythmic market data servers. Zenfire, as an example, would be connected to the Rhythmic data servers. So are we. So we do all of our analysis on our servers, and we send you the signal. You don't do any analysis on your computer. No analysis is done on your computer. No analysis. So we do it, at our CME data center servers. So another way to look at that would be if you're at the CME data center, you're at the CME, Rhythmic servers are there, so are the EOTPRO servers. Okay? And then Rhythmic sends, if you have an account with AGN Futures, for example, you have a direct connection to Rhythmic. It would go to your NinjaTrader, and then the EOTPRO analysis will be sent to your NinjaTrader. So the CME goes to Rhythmic, Rhythmic goes to your Ninja to give you market data. The CME goes to Rhythmic, then comes to EOTPRO server, we calculate the analysis, and then it goes to your NinjaTrader. So we're trying to reduce some latency in there for you by doing all of the calculations at the CME data center. Now that gives you an advantage, especially for our AGN clients, because we are actually coming up in a month or so, we are going to be executing a block account of all of our clients' money for those who want to participate in the block account. We're going to be executing that block from a server at the CME data center right to the Rhythmic data servers. We're in the same building. So we hope to be able to get faster fills. We hope to be, we're trading all of the clients' money. It's a block account. It's pretty cool. That definitely gives us an advantage. That definitely gives an advantage. In this scenario, this is for more of the discretionary trader. If you want to get a signal from us, it comes from our server. You see the signal go long on 6E, for example, and then you act on it, and then your trade goes through the Rhythmic server to the CME. My point is, it's really important to understand how the data and how the orders travel. Take some time. If speed is important to you, if latency is important to you, take some time, figure it out. Look on the internet. All the data is there. All the information's there. One of the cool things that we're doing is because our server's at the CME data center and because we're receiving very, very low latency market data, we're able to take a look at the speed of that market data. And that's what that histogram here is at the very bottom. And there's one thing that we've kind of noticed when the speed between trades is very low, and this is a scale in milliseconds between trades. How many milliseconds was there between trades? So when the histogram is high, it's saying that there's 1 second, 1,000 milliseconds between trades. Between trades. A trade goes off, and then a second later, another trade goes off, and then a second later, another trade goes off. It's pretty cool that we can now take a look and we can actually feed this indicator to you, and it's calculated on our server in Chicago. It can give you when is the market really accelerating, and those are the times when the market seems to have its biggest, most powerful moves, and those are the times when we're going to be executing our trades on NCEP 3. Those are the trades when we're going to look for. We're going to use this as a filter, so to speak. We don't want to trade when the market's all crappy and moving slow. We want to trade when there's a fast market move. We want to trade when things rock and roll. We want to trade when the market is like boom, moves fast. We're able to analyze that data now, and we're able to look at that. That gives us a big advantage in knowing when to execute a trade. And because our server is executing trades at the CME data center in a block account, we can get into those trades very, very quickly. Here's another screenshot of that same thing, and you can see that that the best trades seem to happen when the market data when there's very, very, very small time between trades. It's pretty cool. All right, I'm going to talk to you about Thomson Reuters now. I know that I'm running out of time. I only have like 2 minutes left, but I got so much more to talk to you about. At least I can get the Thomson Reuters stuff in. We're partnered with Thomson Reuters. We just signed a 2-year agreement with them. and we're going to be providing next level news analytics from Thomson Reuters. I'm going to be showing you a little bit about that right now. It has never been offered before in the retail industry. It is a brand new source of alpha. It is designed for stocks, options, and futures traders. It's important to understand. Let's take a look at ES, for example. What is ES? What is ES? ES is made up of 500 stocks. The underlying way that ES moves is that if the stocks move. Yes, futures traders can push ES around. Yes, futures traders can push the TF around a little bit. Yes, they can. But not very much, because those markets are derived from the stocks. And those stocks move because people are reacting to news. People are reacting to news. Those stocks move. Jim Cramer, he's a great example of moving a stock. When he talks about a stock, it moves. It's a perfect example of news. So we're offering analytics from Thomson Reuters. This is Bank of America. And Thomson Reuters has analytics. They use natural language processing to read the news story and score news stories instantly, whether they're positive or negative. The red dots are news stories that have come out. In this case, there was a buy imbalance news story. And this blue line that sticks out from these little red dots, that is the Thomson Reuters scoring of how positive or negative the story is. It comes down, it's negative. Goes up, it's positive. It's that simple. It's that simple. Thomson Reuters scores the news stories on how negative or positive it is compared to the last one. How did it compare to the recent stories? Was it the first story, the second story, the third story, the fourth story? Because obviously a fourth story on something is not going to have such an impact as the first story. So here in this example, the Bank of America names Bridget O'Connor Chief Technology Officer for Consumer and Small Business Banking. Now, whenever a big company names a new officer probably will have a big impact on the company. And in this case, Thomson Reuters immediately, the natural language processing at Thomson Reuters, and right away scored this negative. Right away they scored it as a highly negative news story with high volatility. And you can see right here when the news story came out that right here this red dot showed up on the chart telling you that the news story was negative. And right there, about half an hour later, the reaction started to kick in and this news story started to fall. And the stock started to fall, and it fell from about $14 to $13.75. And if you were day trading Bank of America, you certainly could have taken advantage of the move. You would have had lots of time to get in. You may, want to use this as well as some other analytics. Then we have a couple of positive news stories with low volatility that come out. Some article that comes out with Bank of America on it is scored as positive. Then another news story, Wall Street urges some court to do something, I don't care what, and that was scored as positive as well. But the impact of the dashed line means volatility, okay? It was pretty negative volatility. But it was still positive, and much later, a few hours later, the stock started to move up. Scoring news and looking at news like this has never been done before to the retail crowd. It's very, very cool. So imagine this. You now can look at every single news story across 500 stocks and add it all together and see if the S&P 500 is positive or negative. Sentiment has positive or negative news sentiment. Here is a screenshot of the S&P 500 in blue compared to the news stories in red. And all of the news stories of every single stock is scored positive or negative. And you can see this is a very longer term chart. These bars are monthly. Okay, this is a long term chart, but we're also going to provide this intraday, daily, weekly, monthly. And you can see before the meltdown of that the market recently had, that 3 months before the meltdown, the news stories on the S&P 500 stocks started to get negative. You had 3 months in advance. Warning. 3 months. Hedge funds use this level of information to trade on a longer term basis. We're going to use this information to help us trade futures intraday, stocks daily, options weekly, and monthly. We're also going to be looking at indices like ES, NASDAQ, Russell, Dow, and ETFs as well. So it's pretty fascinating that you can score news. Who gives a crap what the news story is? Who cares? You don't need to care anymore. Thomson Reuters is going to tell you whether it's positive or whether it's negative. This is coming out on NinjaTrader exclusively. This is a NinjaTrader exclusive analytics product through EOTPRO. No, not right now. That's Thomson Reuters. I don't know how much more time I have. If anybody from NinjaTrader wants to interrupt me and say, Bill, your time's up, great, go ahead. I'm just going to keep talking until I hear your voice, Ray. So I don't know how much more time I have. We own a brokerage company. I have 8 more minutes. Thanks. We own a brokerage company. Part of a brokerage company is called AGN Futures. We support 10 different platforms in that brokerage company, but the one that we use and the one that we decided to use is NinjaTrader. It's the best. NinjaTrader is the best. It allows us to do stuff that we can't do in any of these other platforms. Our trader has awesome execution, but it has no charts. Strategy Runner, well, I don't know. It's okay. CQG and eSignal and QST, well, they're okay, but they're not nearly on the level that NinjaTrader is. eSignal's cool, but it's pretty expensive. Multicharts is cool, but doesn't have the good order execution like NinjaTrader. Vortex MT, I've never even seen it before. And Sierra Charts, well, it's not nearly as good as NinjaTrader. I have to say that out of all these platforms, I really feel that NinjaTrader provides the edge. And if you're not a NinjaTrader user, I would highly recommend that you check it out. Now, so our brokerage company, we clear through Vision Financial. It's one of the biggest FCMs, financial clearing merchants in the United States. Their funds are guaranteed by the exchange. So in case of an absolute meltdown, your funds are very safe with Vision Financial. Huge company. One of because we deal with Vision Financial, they provide us with Rhythmic data. I spoke about Rhythmic. Rhythmic servers are connected directly to the CME. There's no other servers. It's Rhythmic. It's the CME, Rhythmic, and you. There's nothing in between. It's really important. So they claim if you are in the same building as them that you have a 250 microsecond data latency, and we're in the same building as them. We are very focused on quality customer service, quality execution infrastructure, and maximum flexibility. Our minimum opening account balance is $5,000. Our margins are higher than most other brokers. We aren't wanting the clients that are interested in trading with $400 margins because we feel that is dangerous. We don't want you to come in and lose your money. Being underfunded is a huge risk, and it's just not worth it. If you can't afford to trade, please don't. Please don't trade. And so we charge $1,000 of margin per contract because we don't want to put you at risk Being underfunded is too dangerous. And if you're looking for a broker with $400 margins, there's lots of them out there. There's lots of them out there. But that's not the kind of client that we're after. We actually care about our clients. We want you to make money, and we don't want you to be underfunded. We really don't. We, as I mentioned, are going to be executing a block account for our clients who open an account with AGN Futures. We have people with Series 3 licenses who are available, who are going to be looking over the strategy. We're going to be using NinjaTrader running on our server at the CME. What is the future stand for EOTPRO? Ray, how much more time do I got? What is the future of EOTPRO? I don't know if I have 6 minutes. Thank you. Machine learning is the advantage, is the future for EOTPRO. One, besides being partnered with Thomson Reuters, we are partnering ourselves with another Fortune 500 company. Actually, I don't think Thomson Reuters is Fortune 500, but this company who we're partnering is. This is a snapshot of some data mining that we did on ES, and it's really interesting to see. This is attribute importance, and something really interesting has come out of this. The most important attribute that you can use in your trading is volume. You can see how high that attribute is in importance. The worst attribute is a NinjaTrader built-in indicator called buy-sell pressure. It actually will hurt your trading if you use it, according to our analysis. Buy-sell pressure is a built-in NinjaTrader indicator. Don't use it. It ain't very good, according to our analysis. It's interesting because some of the data mining advantages and some of the things that we're doing in the future give us some really cool numbers. We can see some percentages here in these two middle columns. What is the percentage likelihood if we use all of the indicators, if we use some of the indicators, if we don't use any of the indicators? And they're very high. Some of them are very high. If we use the indicators only and we don't look at price action, there's a 50%, 56% probability that price will move in our direction. That's not very high. But if we use everything, including price action, including volume, and including indicators, we can push that number to 78% accuracy if we are going long, and 87% accuracy if we are going short. Those are very, very high accuracy numbers that we are starting to understand what is needed to actually predict price movement. And in this case, we're trying to predict price movement 3 minutes into the future. So the point is that we're trying to look at analysis techniques and what is the most important. What are we using as far as our analysis, and what are some of the plots going to look like? Here's an example of one of the plots that we're going to be using in NinjaTrader. We're using support vector machine. It's machine learning that uses classification and regression analysis. It's actually machine learning. The machine mines 3 years of data, applies it on a 2-year of data chunk, gives us the percentage of its accuracy, and then every bar that this model moves forward, the machine tries to become more and more accurate. Self-learning. Will it be cool? Will it work? I don't know. We'll see. And we haven't looked at it. We haven't looked at it yet, but all of that stuff is important. I'm going to skip over some of the other stuff because there's a couple of things that we're going to do. How much does all this stuff cost? $233 a month. Why $233 a month? Because we feel that we like the subscription model. It's good for you. It's good for us. $233 a month is cheap. You can try our stuff for $233 a month. If it doesn't work, you haven't lost $5 grand. You're not gonna You're not going to go away and you're not going to go, oh crap, I just spent $5,000 on indicators. I just spent $5,000 on indicators and they suck. We don't do that. We charge $233 a month. Now, we just put in a new server at the CME data center that feeds the analysis to you. There's limited room. So included in the 233 is the Thomson Reuters analytics. So for this month, the Thomson Reuters stuff doesn't come out for about another month or two. But anybody who's an EOTPRO client this month will just get the Thomson Reuters stuff included in the 233. When the Thomson Reuters stuff comes out by itself, it's going to be $377 by itself. And then if you want EOTPRO, it's going to be $233 on top of that. You're going to be, if you want everything we have, it's going to be like $600. If you sign up now, you get because it's our 5th anniversary, etc., etc., etc. We're going to just give you everything for $233. I'm not going to talk about that right now because I'm out of time. We're giving away 2 1-month subscriptions to EOTPRO right now. And I'm going to give you a link. Enter your email address. We will notify you if you've won. So the actionable items are here. You can join our email list and get emails from us coming to our free trial. You can email or you can call us. It's under the contacts under our website. We have free trials in our trading room every Wednesday. You can buy a subscription for $233. Very inexpensive. Everybody can afford $233. It's cheap. Come check it out. Try this stuff out for yourself. You can open an account with AGN Futures and have us trade for you if you wish. You can engage us to, well, actually, you can. I didn't even talk about that part. And you can engage us on the Thomson Reuters product, which is going to be exclusively available through NinjaTrader. And that concludes my presentation. So I'm going to give you a link right now where you enter in your email address, and we are going to give 2 1-month subscriptions away right now to you if you enter in your email address and you win. And yes, I did, Glenn. Yeah, I showed my account. Yep. I talked about my account for like 10 minutes. Yep. Okay, everybody, let me just get this link for you. Let me get my link. Alice, here it is. It's coming. It's coming. I know I'm out of time. Ray wants to go home. Ray wants to go home. There you go. Enter your name there. Enter your name there before Ray goes home. And you have a chance to win a 1-month free subscription. That concludes my presentation, ladies and gentlemen. I hope you enjoyed it. And thank you very much for coming. I really appreciate it. And please visit us on free trial days every Wednesday. Thank you. Thank you. Thank you for your kind words. You will be notified via email. Thank you. Thank you. I really appreciate you guys being here. You're very kind. We really do care about our clients, and we hope you come. The best webinar ever. Thanks, Jerry. Thank you. Thank you for your awesome words. Thank you. Thanks, Peter. Thanks, JW. JW. Thank you. Ivan. Email me if you have any questions. Call me if you have any questions. My email address and my phone number is on the website. Thanks, everybody.